So let's look at the disbursement process and what happens after the loan has been sanctioned. But before that, just to clarify, what is the difference between a sanction and a disbursement? Very simplistically put, supposing you apply to me for a loan of say 100 rupees and I say yes, I will give you that loan of 100 and I give you a letter or give you a verbal assurance, that is an approval, otherwise called a sanction. It is a sanction without the actual money going out or from one person to the other, from the lending institution to the borrower. That process of the money actually flowing out is disbursement, which is what we are going to talk about now. Another aspect which I need to clarify is the CAM. We called it the Credit Approval Memo. Now, what is the Credit Approval Memo? Simplistically put, it's a memo for the approval of the credit. Now, that sounds a little funny because I've just read the whole thing backwards, but in reality, that is what it is. If somebody is approving a loan, some authority who is authorized to sanction or approve a loan, he needs a snapshot of the recommendation. Who are we giving the loan to? What amount? What terms? What interest rate? What repayment number of years? What other special conditions? What is the income of the person? What does the person do? All this, which has been done through the entire appraisal and double checking process, is summarized, so it's available in one snapshot on one piece of paper to the person who is approving the loan. If of course that approver wants, he or she can go into the file and look at each document. But 3 years tax returns, bank statements, all that is being summarized into a final recommendation, which is being put up for approval and is called in industry parlance as a CAM, or a Credit Approval Memo. We're going to talk about what happens after a loan has been approved or sanctioned. A sanction letter has been issued and now the customer moves to the next stage, or the file moves to the next stage, which is the pre-disbursement stage. What activities can happen and how they should be treated prior to disbursement and after sanction. Now, a customer, a loan applicant, can come back and ask for certain changes after the loan has been approved. Typically, those changes can be an increase or decrease in the loan amount. It can be a change in the term of the loan, or it can even be a change in the property which he had originally identified and now has decided to buy another property which has a different cost, a different area, a different stage of development. If the customer comes back for a change in the loan terms, like I said, for either increasing or decreasing the loan amount and or the term of the loan, you need to do a quick check. Now, the reason I'm saying it's a quick check is because if he wants a reduction in the loan, it's easier to do it. However, if the person wants an increase in the loan, you virtually are doing a reappraisal. Is he eligible for the increase? Does the cost of the property and the limitations on the regulations from a loan to value perspective, does it allow you to even consider the increase in the loan? So this requires a full reappraisal. If enough time has passed, you might have to even look at his tax returns or salary slip and reconfirm that his servicing capacity has not been deteriorated because of a change in his circumstances. You might have to even pull a fresh credit report from one of the bureaus to confirm that there has not been any significant change, especially downwards, in his servicing capacity. That requires, as I said, a reappraisal, a reapproval, and it goes through the process as each lender has in his organization to approve these changes. And a fresh, revised approval or sanction letter is issued to the customer. Now, this is if he comes back for a change prior to taking any disbursement. The second situation that happens typically is the person might or might not have selected the property up to this stage. Any work regarding pre-disbursement, whether it is legal appraisal of the property, the technical checking of the property and the documentation, has to happen once the customer has not only selected the property that he wants to buy, but has also submitted the relevant documents. Now, these documents vary depending upon which city or state you are looking at in terms of where the property is located. Also, it varies depending on whether you are buying it from a developer, from a development authority, it's a resale, or the person is constructing. Is it that he's extending his current house? Is it that he's asked for a loan to repair his house? So all these factors decide what documentation you need. Once the person submits the original, you trigger the legal process which we just talked about a little while ago. Separately, you also trigger the technical process. If, for example, he's doing a home improvement loan, you might want to check the estimates and then see whether he's actually making those changes or not. If he's extending, has he got the approvals to add another floor or extend one room? Of course, if he's buying or constructing, then you need to check that the progress of the work warrants disbursement and the quality warrants that you give a loan for that particular property, and that all the appropriate authorities locally have given their approval for the construction as he proposes to actually construct. Now, if the person has not yet selected his property, then you need to trigger a request to him saying that, look, your loan is sanctioned, you now need to give us the property documents. Hopefully the customer was serious and therefore has actually chosen the property or is in the process of finalizing the same. However, if for a sustained period of time, and that depends on each lender, the person does not come back or says, I have decided not to buy a property at this stage, you need to do what is called cancel the loan. Now, there is a difference between cancelling a loan and closing a file. Let's quickly talk about that. If a customer applies for a loan and his loan has not yet been sanctioned or approved, and for whatever reason, either you don't want to give the loan because he does not fit in with your credit policies, or alternatively, he himself decides that he doesn't want the loan, since the loan has not yet been approved or sanctioned, there's nothing to cancel. You just close the file. Give his documents back, refund any fees if your policy allows that to happen. However, if the loan has already been sanctioned or been approved, and now the customer comes back that he doesn't want the loan, or you find some significant development which now requires you to actually say, we have sanctioned it in principle, but we cannot give you the loan because new facts have come to light, then you can't just close the file. You have to cancel the loan amount because it's no longer a commitment from your side as a lender to go and give him the loan finally because he doesn't want it. So that's the cancellation process. So in the pre-disbursement process, one, you're going to handle any request for changes in the terms. You need to make sure that the property documents are received so you can trigger legal and technical. And the third is that if the customer or you decide that you don't want to go ahead, then you need to cancel the loan.